What is up, guys? Dirk here. Happy Monday. It is October 31st. Just a quick update on the weekly candle closes of Bitcoin, Ethereum, the S&P 500, and the Dow Jones Industrial Average. I just want to run you through this real quick before we get the monthly close, which obviously happens after today. And tomorrow I will do an update on the monthly closes here on the channel. So make sure you are subscribed. Click the notification bell and get on my email list if you haven't done so yet. It's the first link in the description down below. That way I can just send you an email whenever I upload a new video. Okay, Bitcoin is trading at 20,500. So we closed the week above 20.5K, which is an important level to watch, an important level to flip in my opinion. So I've already shared with you the 3-day chart and the 50 moving average on the 3-day chart. That is going to be very important for Bitcoin, which is, let me show you very quickly before we move back to this. This is what we're watching. We're watching for a reclaim here, just over 21K. We flip that, and then I think we get some decent size upside momentum, as I've explained in that previous video. Now, going back to the weekly chart, we had a nice green week last week, and it does look like there's some bullish momentum, as you've probably understood by my last two video updates that I've posted here. I also made an update here on Twitter yesterday where I created a large thread and thinking why we could potentially see a bounce. There's a lot of information on here, so go and check that out. I will link to it in the description down below. But to summarize, basically I expect more bullish continuation this week. And you can also see there is a bullish divergence here on the weekly. Now that alone doesn't mean very much because those bullish divergences aren't super reliable on their own. But in combination with other factors, they could help create more confidence for a more bullish scenario. And in my opinion, it looks like we are getting more upside here. So as soon as we flip that 3-day 50 moving average, just over 21K, I do expect a move here back towards the 200-week moving average, which is the red over here. And that has always been an important level to watch. If we can reclaim that with a weekly close back above it, things start to get interesting for the bulls, and we could be looking at a longer, extended, higher bullish rally. And note that I'm not saying it's necessarily a new bull market. That is not the case immediately. We could rally to 28, 30, 32,000, which is still this level of the 50-week moving average, and then come back down just as a longer extended bear market rally, which would still create a lower high compared to this high over here. Okay, so can't get too excited just yet, but if we do get that nice rally, I mean, if we go up to $28,000, $30,000, of course, that would be very nice because, you know, that's almost a 50% gain in Bitcoin. And we would probably see altcoins do a 2, 3, 4, 5x, depending which altcoins. Of course, the higher cap ones aren't going to make those kind of moves, but the low caps could end up making some explosive moves. But okay, that is the best case scenario if we do get that bullish follow through. We have to take this a week at a time, 3 days at a time, a day at a time to see how it continues to develop. For now, I would like to see it target this 200-week moving average, just about $24,000 at this point in time. Then we have to wait and see, do we get rejected here or not, or do we reclaim it? If we reclaim it, the likely target is going to be the 50-week moving average, which, as you can see, is very important. That is a more important bear bull indicator than this 200. As you can see over here, the whole bull market lasted as long as we were above the 50-week moving average. That is true bull market territory if we get back above there. When we're beneath it, it's basically bear market territory all the way. Even though we get these rallies, you can see this rally, it fake out and it dropped. So that's going to be the ultimate decider. And I do think at the first attempt of going back to touch it, it would probably get rejected. But like I said, one step at a time. Most likely target for now for bullish continuation would be about the 200-week moving average. This is around that 24K level, which I've been saying for a long time is going to be very important for me personally to decide, are we in a more bearish or more bullish trend? We reclaim that, I start to flip more bullish for the longer term. However, though, for the downside, we have to keep an eye here. I would say 19.7 to about 19.5. Ideally, we want $19,700 to hold. If we get back below there, 19.5 may be still acceptable on a bit of a wick. But if we get below 19.5, this bullish scenario I think is off the table, and we could continue to potentially even new lows. So it's always an if this then that scenario. You always have these criteria. If we stay above a certain level, we're likely to continue higher, but if we break below that level, then the downside becomes a much higher probability. That's basically just how it works. Now heading over to Ethereum, we had a really nice big green week for Ethereum. You can see there's a lot of strength behind that. And what is nice to see is that the 200-week moving average actually held as support this time. You can see multiple weeks over here on that 200-week moving average. It did look dicey at the time. It looked like it could break down and then probably see new lows, but it didn't. We got a massive pump instead. And now I think there's strength behind this move, and I think we likely see more upside continuation, of which I think the target would simply be the 50-week moving average, which is currently around $2,300 on Ethereum. The downside, of course, or the line in the sand where the bulls have to maximum defend, is this 200-week moving average, which is around 1,330. We get below there, I think the chance is really high we see new lows. So let's have a look at the two most important US indexes, or two of the biggest ones anyway, the SPX and the Dow Jones Industrial Average. This is a weekly chart, and as you can see, we have the 50 moving average in blue and the 200 in red. And the 200 is just very, very important because that a lot of people are watching that. We get below there and we are in major bear market territory. But we managed to hold it, as you can see. Let me zoom out a little bit more so you can see here again. You know, we've held this multiple times. You can see it touched it here, touched it here. This was the March 2020 sell-off, a wick below it. This was a 17% drop, by the way, but it recovered, and then we got a massive continuation here of the bull market. So far, good news. We got a little wick below it weekly, but we didn't close below it, and we bounced off it now for 2 big green weeks in a row. So the bulls are safe for now, and potentially even they are in control, but we don't know that yet for sure until we reclaim the 50-week moving average. So I would say this is going to be the likely target. It does seem there's momentum behind this rally, as you can see in crypto also. It's happening in the stock markets also. They go hand in hand. They seem to be very correlated. So if we get a continuation here, the 50-week moving average is going to be important, which is around 41.85 at this point. And then we have to see, does it reject here? If it does, that is not a good sign. But if we can flip this and we get back above the 50-week moving average, things are starting to look really good for the bulls, and we might actually just run all the way back up to the all-time high and maybe even create new highs if we can flip this 50-week moving average. Because you can see what happens over here. We hold the 200, that's obviously good. We're still in bull market territory, but once we get back above the 50, that's when things really start to pick up, right? You can see over here we got above the 50 and we have a big run. Of course, this was March 2020 sell-off, but then we got back above the 50 and we had a major run. So for now, the bulls are safe. Maybe they're in control, but we don't know for sure. Once the 50-week moving average gets flipped to the upside and we reclaim that with a weekly close above it, then I would say the bulls are back in control, and we could potentially be looking at a major run to the all-time high or new highs in the SPX. Then finally, let's look at the Dow Jones Industrial Average, which always tends to be a little bit ahead or in terms of movement compared to the SPX. It was first to close below the 200-week moving average, where the SPX didn't really close below it. It wicked below it. It did close below it. That looked bad, but that ended up being a fake out, which is interesting. And you can see we rocketed higher, and that was one of the largest moves here in 2022 in terms of weekly moves for the Dow Jones. And you can see big momentum here. We reclaimed that 200-week moving average, and we are sitting right at that 50-week moving average, where the SPX still has some way to go. So the bulls are safe here for now. They're above the 200-week moving average, and we are almost here reclaiming this 50-week moving average. And as you can see in the past, you can go and look at this yourself on your charts. Once we reclaim the 50, we are in proper bull market territory once again. And you can see these big runs tend to happen once we're back above the 50. So that could actually happen pretty soon, maybe even this week for the Dow Jones. If we get back above this 50, the all-time high isn't that far above us, and we could potentially just go back to that all-time high or even new highs in the Dow Jones Industrial Average. So that is something that we need to keep an eye on, because this is going to be important. If this ended up just being a year-long slow grind down mini bear trend that has no follow-through and instead ends up being a bull flag with a final melt-up rally, some people have been talking about that. We get a final melt-up rally, even though the macro is bad, even though inflation is bad, even though the Fed is quantitative tightening and not quantitative easing, we could get that pivot at some point. There is potential, if we flip these 50-week moving averages maybe for a melt up, which would also be good for Bitcoin and crypto. So that was a quick update for the week. If you liked this, smash the like button. Make sure you are subscribed. Tomorrow I will do an update on the monthly candle closes to see how that closes. Hopefully it's not going to be very much different from today, which would be good if we can close Bitcoin above 20K for the month. But I will update you with that tomorrow. So if you want to get an email when I upload a new video, click the first link in the description down below. Thanks for watching. Have an awesome week, and I will see you tomorrow.